We are in a bull market. Undeniably, it is steamrolling hot bull market. Take a look at the S&P 500 zoomed out here. We are here. Tippy top, August 2025. We cannot be this high in the market right now unless we're in a bull market. And when did this bull market start? Well, taking a look, it started back in October of 2022. So we had that COVID bull market where we had all the stimulus from the Fed, all of that money just hitting people's bank accounts. The COVID bull market ended in 2022 in January. The market fell. It bottomed out in October 2022. So we went through a bear market there. And then that bull market started at the bottom of October 22, going up 80% to now August of 2025. So we're up 80% in less than 3 years, almost 3 years, about 2.9 years. And it has a lot of people, including myself, asking, is this bull market over? I mean, 80% gain in less than 3 years is a lot. And none of us want to feel like idiots and kind of just get rolled over now going into a bear market. So it's impossible to time the market. It's impossible to know whenever a bull market ends and a new bear market starts. But I like to look back at history and get a feel for how long do average bull markets actually last for. And that will help give me a sense of when could we maybe expect this one to end? So that's exactly what we're going to do today. And just looking at S&P 500 market cycles since 1957 to now, there have been 12 bull markets and 11 bear markets. Now, if we add up all 12 bull markets, they total 56 years. The market's been in a bull market for 56 years total, going back from 1957 to now, whereas the bear markets have only combined added up to be 12 years of bear markets. And then if we look at the gains in bull markets, gains are 1,800% total from 1957 to now in all those bull markets, where the losses in bear markets only add up to 380%. So if you were to ride out all of those bull markets and all of those bear markets, take 1,800 minus 380, you'd still be up 1,500%, which just right off the bat makes me feel good as an investor, somebody who knows that I can't time the market. I'm just willing to ride these things out, the bull markets and the bear markets. I like to see that overall, if you're in a bull market, you're probably going to be making money. Actually, you will make money up to now, right? So this is what we're going to be looking at today. All of the bull markets going back from the past. How long have they lasted? What have been their average gains? And then compare it to the bull market that we're in right now. And then on the flip side, look at those bear markets. How long do they last on average? What are those average losses? And see, even if the market does roll over, should we be concerned about it? So before we get started, I just want to say thank you for being here. I'm Jacob. I'm building wealth for me and my family. I'm sitting at $700,000, cha-ching, and I'm on a war path to get to $1 million by the time I'm 32. So on this channel, I like to show everything I've learned that's helped get me to where I am, everything regarding personal finance, investing, budgeting, saving, stuff like that. And if you're into that type of content, be sure to hit that subscribe button and hit that like button, por favor, big thumbs up so other people can find this channel too. Now, let's make sure we're on the same page of what is a bull market and what is a bear market. So a bull market is whenever a market bottoms. At the end of a bear market, whenever the market comes to the very bottom of a bear market and stocks go up by 20%, and then continue to keep going, they don't retract those gains. So taking a look at that October 22nd bear market, we can see it ended October 22nd right there, down 27%. And then stocks just continually go up. And by the time they hit 20% and keep going, that is whenever we know we're in a new bull market. And then vice versa, when do we know we're in a bear market? Well, bear markets are whenever bull markets peak. So at the beginning of 2022 in January, that bull market peaked, that COVID bull market, whenever we got all that stimulus, it peaked there and then went all the way down 27%, and then it ended in October 2022. So typically bull markets do go longer than bear markets. That's why we saw that all the bull markets combined have been 56 years, where those bear markets have only been 12 years. And well, this is our definition for bull and bear markets, and we're all on the same page now. So looking here at this chart I put together, this is the S&P 500 bull and bear markets from 1950 to 2025. We can see all the green triangles up here at the top. These are all 12 of those bull markets dating back for these 75 years. And then on the bottom, we see these gray triangles, which are all the bear markets dating back for 75 years. There's 11 of those, 12 of the bull markets. Now, a lot of these bull market triangles are pretty much the same size. We can go back to the 60s here, 50s, 60s, where it was up 86% in a bull market that lasted 4.2 years. We see 79%, 74%. We keep going to the 90s, 65%, 101%. So a lot of these are under 100% bull markets, but some of them really stand out. Like here's the one going from the 90s all the way up to the dot-com bubble here. This was a 417% bull market lasting 9.4 years. And then we took a 49% dip. The market basically got a 50% haircut, and it lasted 31 months in a bear market all the way to 2002. And then we went on a 101% bull market that lasted 5 years from 2002 to 2007, which was then the GFC, and the market took another 56% haircut. But from 2010 to 2020, we went on another 400% bull market that lasted 10.9 years. This was a crazy one, 10 years, 400%. So that is two 400% bull markets going back in the S&P 500 from 1950 to now. But a lot of these don't even get to 100%. Some of them get to 400%. So looking at the average bull market lasts 4.7 years. And whenever we take a look at the one we're in right now, here it is. Here's 2020. There's where we had the COVID dip, 33%. Here's where we had the October of 2022 dip, 27%. I didn't put in the Trump tariff type of dip that we had. That could have been signaled as a bear market. But just to give the bears the benefit of the doubt here, let's say that we're just in a bull market now going from 2022 up to now. We've been in it for 2.9 years. We're up 80%. So the average gain in a bull market is 151%, and the average duration is 4.7%. So based on that, we could still have another 71% left in the bull market that we're currently in. Basically, we could be doubling where we're at from here, and that could be over the next 2-year period because we're only at 2.9 years and the average bull market lasts 4.7 years. So in 2 years, I mean, just based off the averages, we could be up 71% over the next 2 years, which would be pretty crazy. That'd be back-to-back 35% gains in the stock market, but that's also not heard of. Like, we just did that coming out of 2022. Of course, that was from the bottom, but it's also, again, not heard of. Now, taking a look at these bear markets here, we see that most of them really aren't that bad. Almost all of them here are in the 20s. So again, going back to 1960, we had a 28% bear market that lasts 6 months, and then 22%, 27%, 20%, 33%, 27%. The average bear market is only 34.5% losses, where the average bull market is 151% in gains. And that's why I say, even if we are at the top, and like I believe, what if the market does roll over? We just went on an 80% gain. We're up 80% in 2.9 years. Even if the market does an average bear market for 1 year, I mean, that's the average market duration for a bear market. It goes down for 1 year, 34%. 80 minus 34%, what is that? 46%? We'd still be up 46% in a bear market. So even if we were to be rolling over in the stock market right now, let's say we don't even get that additional 2 years in our average bull case scenario right now, we don't get that additional 70%. If we get an average bear market from where we are right now, we'd still be up over 40% in 2.9 years. So this is what I like to look at, just the market history of seeing what happens if we just write out average bull markets. Based on the averages, we're still really early in a bull market. We're only like halfway there compared to other bull markets in the past. Now, lastly, I think I've made it clear that I don't care. I will ride out these waves. I'm 28. I think that if you're in the market for 10, 12, 20, 30 years, you're going to make money. And some people look at this chart of seeing the S&P 500 on this monthly chart. We are here at the tippy top, and look at it and say, oh my gosh, we're at the top. This looks scary. We could be falling off a cliff. I look at this and I think, wow, we've been through 11 bear markets and here we are still at the top making new all-time highs. So I have much more of an optimistic viewpoint, not a pessimistic viewpoint. That's why I'm much more optimistic just on bull markets. The proof is in the pudding that bull markets make more money. Now, one last thing I want to show you are the rolling returns in the S&P 500, specifically looking at the SPY ETF, which is probably the most popular and well-known ETF out there for the S&P 500. And these are rolling returns going back from 1950 to 2025, so 76 years. And if we look at rolling returns on the periods of 10 years, so this means if you were to invest any one 10-year period, how much would you be up over the next 10 years? There's only been one time over the past 76 years where if you would have invested right here on January, March, December 1999, basically, all the way through that last decade in the 2000s, would you have been down for your investment 10 years later? Any other time, if you were invested any other 10-year period, January 1974 to December 1983, you're up 10%. October 1979 to September 1989, you're up 16.8% on average over that 10-year period. And we can also see here the median return over any 10-year given period in the S&P 500 was 10.9%, the best being 19.27%, and the negative being that minus 3.04% in that last decade here going through the 2000s. But that means that pretty much if you're invested for 10 years, you're almost guaranteed to make money in the long term. And that's why I don't think it really matters if even today's bull market ends tomorrow. But we can look at more of these. I like to look at the 12 years. Once you get up to 12 years, going back 76 years in the S&P 500, there have been 0 times where if you were to have invested 12 years later, your portfolio was down. The best was it was up 19.05%. The median, it was up 10.45%. We can look at this also now on a 15-year time period. There has been 0 times where if you invested that 15 years later, your portfolio was down. The median, 10.09%. The best, 19.2%. And then we keep looking at this on the 20-year time frame. 0 times where you invested for 20 years, your portfolio is down. And lastly, the 30-year time frame, 0 times if you were to have invested, your portfolio was down 30 years later. So if you're in the market for the long term, it doesn't really matter if we're in a bull market right now. It doesn't matter if we're in a bear market right now. Overall, the market's going to be up over the next 12, 20, 30 years. As long as your time horizon's long enough, none of this really matters, but it's still fun to look at. It still makes me feel good about holding on through the market. Dollar cost averaging, I have a lot of content about dollar cost averaging up here, and seeing that over the long term, you're going to make millions. You just can't sell too early, because selling early in a bull market is detrimental to our long-term compound gains as young investors. So if you like this video, if this helped you, be sure to hit that subscribe button, hit that like button, por favor, and I will see you with more content next video.